As U.S. President Donald Trump embraces an America First agenda, some economists are painting a pretty gloomy picture about what this policy might mean for the global economy. Zambian-born, Oxford-educated Dambisa Moyo is one of them. Her belief is that these policies could ultimately lead to inflation, slower growth, and even recession. Here's our conversation from earlier today. Well, thanks for coming in. It's great to see you.
Pleasure to be here.
We talk so much in this country about what protectionism in the United States might mean for Canada. You look, as well as us, at the global impact. What do we know about what impact rising protectionism in the U.S. means for the rest of the global economy?
So I think the most important thing that people need to understand is to put this into a broader context. These movements towards protectionism have actually been in train for the past 10 years, right, to be honest, since the financial crisis for sure. And by protectionism, we're talking about trade protectionism, so this is trade in goods and services, but also new reforms that have put much more of a strain on movement of capital as well. And then, of course, there's the issue around the movement of people, which is immigration, which has been a long-running discussion, much more at the national level than the global level. In terms of trade, we do know that World Trade Organization statistics suggest that we are seeing a decline in trade, and that's largely as an artifact of the increases in trade protectionism, both naked protectionism, so by that I mean tariffs and quotas, but also through exchange rate manipulation.
You jammed a lot into that, so let's try to unpack it a little bit. The idea that capital flows have been declining, especially just in the last couple of years.
Yes.
You've looked at that. And it's sort of what's happening. Talk to me about why that matters and what that tells us about sort of what comes next.
So it's a great point. So according to the Bank of International Settlements, we've seen approximately 10% decline in cross-border capital flows over the last couple of years. This is, if you think about a capitalist society and a global society, capital is the lifeblood of an economy. We need the money for investment. We need that money to be flowing around. So not just developed countries, but also developing countries are able to create economic growth by investment in infrastructure, but also a whole host of other public goods that are necessary, and of course to fund companies. But that has been on the decline largely because of new capital regulations on banks and other financial institutions, but also many investors around the world are much more worried about the geopolitical environment, and so have taken their money back home. And also, of course, with the rising dollar, a strong dollar, but also interest rates going up, we think that's a much more attractive proposition in the U.S.
And can that become sort of a self-fulfilling prophecy that when that capital dries up, yet more of it, it can sort of compound upon itself, can't it?
Yeah, it can compound, but also remember that the backdrop of uncertainty, not just in terms of where public policy is going, but also in terms of timing, makes for a situation where people are much more reluctant to invest in countries, places much further from where they are.
And then sort of coupled with that are concerns about inflation and the impact that can have, especially on sort of developing countries with U.S.-denominated debt.
Absolutely. And I think it's quite ironic because, 6 months ago, we were sitting here in a world where about $15 trillion of sovereign debt was under negative interest rates. We were worried about deflation. And all of a sudden now, with the promise of $1 trillion fiscal stimulus in the United States, we're now much more worried about what the implications might be for inflation. But to your point, the promise of 3%, or certainly the market is priced in 3 rate hikes this year, approximately 75 basis points of rate hikes. I mean, for dollar-denominated debt issuers, so countries that have issued debt in dollars, that is going to be a squeeze, especially at a time when commodities demand has declined.
So who specifically feels the pinch on that the worst?
I would argue that a lot of emerging market countries that have dollar debts outstanding will be feeling the pinch. I think that they're also, as I alluded a moment ago, will be suffering not just from the increased cost of having issued this debt in dollars, but also because of the risk of protectionism, they will be less likely to be able to sell their products to many different jurisdictions.
Now, back to the United States, they say, sure, there will be long-term costs associated with protectionism, but this infrastructure plan is going to it'll be the panacea that will spur growth and solve all our problems. You've compared it to Japan, had some pretty significant spending. With what impact?
Yes, well, unfortunately, as we now know as economists, Japan spent approximately $6.3 trillion compared to the U.S.'s, certainly President Trump's proposition of $1 trillion.
Right.
$6.3 trillion spent in Japan with virtually no GDP uptick. And so there are real issues around whether or not we can even can get the uptick from a fiscal spend that we are looking for. Of course, this is complicated by the fact that many Republicans in the United States, both in Congress and the Senate, Congress in particular, are very deeply concerned about the risk of a massive fiscal deficit if they were to increase it to $1 trillion. So they're talking about much less fiscal stimulus in the form of infrastructure.
So let's zoom out sort of 50,000 feet. We've talked about the capital flows across borders. We've talked about the rise of inflation, the fact that the infrastructure plan might not work. What is happening to the now global economy when you put all that together? What are the concerns? I mean, that sounds like a pretty dire picture.
Yes, and I'm afraid I'm probably more on the bearish side here at this moment in time. I think that structurally we have a lot of challenges. We have issues around technology as well, and what that might mean for a jobless underclass. We have massive demographic shifts, both in terms of the quality and quantity of people, and what the implications of that in terms of aging population and the costs there are associated with that. But there are lots of other challenges, the debt burden that we are familiar with, income inequality widening. So these things make me feel quite worried about where the world is going structurally. And then, of course, you've alluded to some of the more immediate factors, which make me also very quite worried.
I read a piece you wrote in which you said inflation will no longer be globally distributed but localized. It sounds like we could say that about sort of immigration problems, about debt, about all of these things, that global ability to sort of balance things out appears to be at least minimized right now.
Yes, absolutely. That's the promise of public policy. So whether it's because of the Brexit vote in the United Kingdom, the risks of the public policy, certainly the political response from Germany and France with their elections this year, we see a world where there is a snapback towards much more nationalism, and the consequences of that will be felt economically. We know this from the history books. It's not a good outcome.
And it's not just capital flows, it's flows of people that sort of tie up in that. If immigration globally does slow down, who suffers the worst in that?
Well, as you probably are aware, we have 65 million people now. This is the highest number since World War II, 65 million refugees. A lot of that is a consequence of bad public policy in terms of politics, but also in terms of economics. I think that the world does suffer because, like capital flows, like trade flows, the idea, certainly on paper, is that you do need the flow so that you can equilibrate demand and supply. And unfortunately, I think countries like the United States that are very heavily dependent on immigrant flows will start to feel a pinch.
And does a country like Canada, would we be penalized, or would we actually stand to benefit by being open and trying to bring in more immigrants?
Well, Canada, of course, has a great reputation for having one of the better approaches to immigration. I mean, I think the other ones are Australia as a close one as well. That tends to be mentioned. I mean, I think what Canada's done very well is to craft a nationalistic approach that focuses on immigration at a time when many other countries have probably not been as sophisticated in terms of their thinking. So I think Canada will probably will get bailed out.
Man, I could talk about this all day long. We're out of time. Really appreciate you coming in.
Thank you for your time. Appreciate it very much. Thank you.